Well, hi, everyone. Today, as part of our broader benefits funding series, we're covering the old standard, fully insured plans. I'm Bryan Davis, a national practice leader here at Nava Benefits. And I've been in the benefits broker consultant business for over 25 years, and I can say from experience, there's no shortage of fully insured plans out there. And today we're going to unpack what it is, how it works, and some of the considerations you should think about when wondering, is this the right funding vehicle for my company's health plan? And I am delighted to have with me today Chris Renzulli, who is a partner here at Nava. Chris, could you tell us a little bit about yourself and what led you to Nava?
Yeah, thanks, Bryan. Hi, everybody. For the better part of, the entirety of my 20 plus year career, I've been in human resource and benefit related positions. Actually had an opportunity to sit on the side of the HR team for a number of years, running a national staffing firm. And really my why and why I came to brokerage and Nava was to make an impact and to change something that I think is just really broken in a lot of different ways. Myself and Nava both subscribe to the fact that we're in a healthcare crisis. And at the end of the day, we're looking to do things very different, bucking the status quo, if you will. And so I've just never been in a better position to serve my longstanding customers than I have been in my time here at Nava.
Well, thanks, Chris. And let's go ahead and dig right in. Chris, what does being fully insured mean? And from your perspective, how does it work?
Yeah, so at its core, fully insured really means that a company's purchased an insurance policy to provide health coverage for its employees as a group. This type of insurance can include medical, dental, sometimes vision coverage as well. Being fully insured, the company transfers the financial risk, in my opinion, to the healthcare companies. And at the end of the day, you're paying a guaranteed premium, whether everyone uses the coverage or no one uses the coverage. You're paying a set, predictable premium, and that's kind of at the core of what being self-insured means.
Thanks, Chris. And so as you think about good candidates and bad candidates for fully insured programs, what in your mind would be the characteristics of a good candidate?
Yeah, I think a couple things come to mind, Bryan. Number one, and at the core, is predictability. In working with these plans, CFOs really appreciate that you're able to plan on a fiscal level, right? So having the fixed payment is really key, understanding what's coming. You're not going to have any unexpected situations, whether you have a premature baby or any type of a large case. For that plan year what you're going to be paying. And I think another really big one is the administrative part. In a fully insured arrangement, all of the administration is on the carrier side. The organization, the broker, anyone else involved in that plan doesn't have to worry about the administration when it comes to adjudicating claims, processing claims, those type of aspects.
Yeah, it's interesting too, as you think about predictability, Chris. Some would argue that the trend increase that people see every single year in a fully insured plan also becomes a little predictable, which may be one of the drawbacks of the program that we'll talk about in a few minutes.
Exactly.
And I'm curious when, as we all know, the end user of a benefits program is the member. At the end of the day, organizations purchase these benefits programs to actually empower the member to be able to access the healthcare system in a positive way. And when we're moving either to a fully insured program or from a fully insured program, is there any difference in the member experience in those situations?
Now, really, at its core, Bryan, there isn't not much. You're still enrolling, whether it's by paper, and some folks still go ahead that route, or an online system. You're still having to make your plan selections as you would, and really balance what is the best option for your family based on your projected need. Accessing care is very similar as well. You're still getting your insurance card. So really, at the core of it, the member experience, if handled if handled properly, is really going to be the same under these various funding strategies. But self-insurance really does provide, again, a lot of predictability, both from the employer and the member side of things.
Yeah, I know a lot of employers who haven't been all that satisfied with the member experience they get through their carrier-based fully insured program will either purchase concierge programs on top of that, or oftentimes, with certainly with Nava clients, they lean on us to help kind of facilitate that experience for the member within the system.
Right.
So you mentioned earlier the lift of administration, or maybe the lack thereof. What are some of the considerations that our HR team should think about in terms of administration of a fully insured program, maybe relative to some other types of programs?
Yeah, I mean, again, I know this is a very common theme amongst all of my responses, but again, it's that predictability, the amount of interaction you need to have in this case, for example, with your broker. You're really worrying about, in my opinion, more of the higher level types of tasks to administer. You're still, again, you're going through enrollment. You still are communicating. You want to make sure to communicate the value of your total reward package in the best way possible, whether it's this particular funding strategy or some of the others that we've reviewed in the series. Managing the vendor is something that, we at Nava obviously take great pride in doing to make sure that we're that primary liaison, really aggressively, professionally aggressively, of course, representing the organization and their goals. Providing employee assistance does remain fairly consistent as well. And then going through, different aspects of compliance and reporting. This is certainly something I think that's noteworthy here. A lot of when you talk about ACA, for example, with the Affordable Health Care Act, that is all, most of that reporting is done on the insurer side. So it does streamline the process in a number of ways versus some of the other strategies like self-funding, for example.
Yeah, that totally makes sense. And if we think about fully insured programs, we've talked about them being predictable in terms of cost. They're relatively easy administration. The member experience is pretty consistent. Moving to and from those arrangements, but they're not for everybody. What are some of the drawbacks that organizations should consider when they're either in a fully insured program or considering one?
Yeah, and I certainly, great question. And I don't want to sway anyone. I think fully insured programs, and many of you watching are likely in one, they have their place, and they always will, in my opinion. For those that, want to look at this, from a different lens, for me, it starts with data. That's something that I really always, and I know Nava prides ourselves on, is managing a plan using data. And under these plans, you don't get as much data, right? They just don't release the data for claims and various things. So a lot of times we're consulting along with the customer with just a bit of a hand tied behind our back because you're subject to really making some assumptions. They can be very rigid, not a lot of opportunity for customization, actually none in the case of medical, for example. It's really an off-the-shelf product. So I think that at the end of the day, the only other thing that comes to mind right now really is the legislative aspect of this. So different states can have different mandates, different legislations that can impact your plan. So even if you operate in 2 or more states, you have to concern yourself a little differently versus some of the other funding arrangements where you can have a bit more consistency across various parts of the country as far as managing your benefit programs.
Yeah, absolutely. And I think one more I might throw on there is just the potential for cost savings. I think a lot of organizations, especially as you get a little bit bigger, north of 150, 200 employees, the self-funded arrangements or the partially self-funded arrangements may really start to make more financial sense relative to the fully insured programs. And that actually maybe is a good segue into my next question. If an organization is thinking about a different option, what should their next steps be? How should they go about doing that?
Yeah, well, it certainly takes a partnership. So, we speak for ourselves here. At Nava, we look at the risk management, assessing the company's risk tolerance and their ability to manage healthcare costs. We look at things like average age and everything we can to really build a story. Look at your employees' needs. Not everyone's the same. What does it take to attract and retain talent is always huge. And, if you're recruiting and you only have, a few employers or a very specific skill set that you're looking for, it may take a lot more to get those employees to come over. As we all know, total rewards are much more than your paycheck. Administrative resources is something to look at. A good broker, and I know we're a bit biased here at Nava, but we truly operate as an extension of the team. We believe finding a brokerage that will partner with you to take as much of the lift off of your plate and take on that, when it comes to things like, administration, plan and data analytics. There's a lot there. And then compliance and legal, making sure that you have, very sound consultative support on ACA reporting and the other various legislations that really oversee these types of medical plans.
And Chris, I think it's fair to say that that this is something that we would expect a good broker to be able to handle for, or at least advise for their clients that are considering potentially leaving a fully insured model. Is that fair?
Yeah, absolutely. I mean, these are partnerships, and like anything else, they're founded on trust and experience. And so the short answer, Bryan, is yes. I did have an opportunity, and I won't go too far down this path, but to operate, as I mentioned in my opening, on the HR side. And there was a stark contrast in my broker partners that were true partners and extensions of my team versus those that just were very reactional and transactional, reactive, and transactional, where we were just checking boxes and moving through the process. There was very little creativity, very little employee support. So short answer is yes, those are all things that I think are paramount to a successful program.
Great. Well, thank you, Chris. And that brings us to the end of our session today. Thanks, everyone. And certainly thank you again, Chris, for walking us through that. We hope you all found this session useful. And if you're interested in learning more about this or any other type of funding arrangement, we have sessions like this for each option on the spectrum. And if you have more specific questions or want to learn a little more about how these funding arrangements might impact your organization, please feel free to email either myself or Chris at the email addresses here. And thank you again for attending. Have a great day.